Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv, and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Amanda Kim of Avante Capital Partners. And what's really different about Avante is that they are really big on helping women progress through the private equity world as a capital provider in this marketplace. And the reason I really enjoy the conversation is we work with a ton of private equity firms, and demographically, a lot of PE firms just don't have enough women working inside the organizations when there are some very talented operators and investors and just really bright women that should have a bigger seat at the table. And what I think Avante, what's special about what they've done is they turned that into a bit of a competitive advantage. And I actually referenced this in the episode as we talk to a lot of PE firms that are trying to distinguish themselves from other providers out there. And as founders, when you're trying to decide which PE firm to kind of go with for a deal, it's hard to distinguish, like, why is private equity firm A different than private equity firm B? And I think what Avante has done is there's a great lesson in there for all private equity firms on how to really position yourself differently and how to really lean into that and create a differentiated position that gets you access to capital from different LPs or access to different types of deals, and also leads to a different level of success in the types of investments that you're making that also performs and generates a return for your LPs and anybody else that's providing capital to the fund. So it's a really great conversation, and Amanda did a great job of kind of outlining that and all the different components that Avante invests into in terms of their operations as being one of those capital providers. So with that said, I'll leave you to it. Enjoy the episode. All right, Amanda, welcome to the show. How's it going?
It's having a great day. How about you?
Great. Excited to have you on. So why don't we start with your background and what Avante does, and let's go from there.
Absolutely. Avante Capital Partners is a private credit fund, lower middle market, founded in 2009 by Jerry Harmon, as well as Emily Simon and Paul Hayama. Based in Los Angeles, we also now have an office in New York, and was really founded with the mission to have private credit and be the premier provider in the lower middle market for both debt and equity. Over the years, started with SBAC Fund 1, $218 million in 2010, and have now grown to almost $1 billion of AUM, and we're raising potentially over $1 billion this year with 2 new strategies, both opportunistic credit strategy as well as more of a pure direct lending fund. The majority of our deals is sponsor-backed, where we're partnering with private equity firms in the lower middle market, but we have now also expanded to independent sponsors and company direct strategies.
And so you're providing financing for the investors that are actually doing M&A and acting as one of the people in the ecosystem that's supporting the transactions.
That's right. So companies of approximately 3 to 30 million of EBITDA, or let's say 10 to 100 million of revenue, really the companies that are driving economic growth in the U.S. We are typically partnering with private equity firms as another institutional capital provider. So if someone's buying a company for 50 million, maybe the private equity firm takes control and puts in 25 million. We provide, let's say 22 million of debt as part of that transaction, and then put in some equity ourselves, maybe 3 million. Although we have, as I mentioned, more recently started to do some more direct deals as well, where maybe we're the only one that's providing 25 million of minority capital, for example. The only deals that we won't do is we are not the majority buyer of companies.
And how do you determine which kind of approach to take there? And I guess historically you've done more debt deals, but now you're doing more equity investments as well. So how do you determine which approach to take for which investments? Is there like a criteria that you're kind of sifting through?
Yeah, great question. We are always credit first with our investors. That's with our investments. That's our legacy. That's what we will continue to focus on. So while there may be some deals where we decide to go 50-50 debt equity, if we think that it's a really attractive equity story, but we will always be credit first in terms of our underwriting and where our fund will lean. In terms of, are we doing a deal where we're participating in the buyout with a private equity firm versus if we're lending directly? The sponsor back strategy is viewed as less risky in the sense that there are more people around the table, right? If you have, typically it's a founder owned company, first institutional capital, having a private equity firm that has a committed fund, right? Let's say, $500 million to put to work. If there are any liquidity issues or bumps in the road, they have that money to support the company. We obviously have money as well with our committed funds. So that is viewed as a less risky strategy versus if we're the only one that has institutional capital in the strategy, then we just don't have as much money around the table, one. And two, we don't have as many bright minds around the table. And Avante is a majority women, minority-owned fund that doesn't necessarily have anything to do with our investment criteria. But one of the things that I think is amazing about a woman-led strategy is that we're very collaborative. We would much rather have lots of smart minds around the table versus thinking that we have huge egos and we're the only ones that can drive value for a company.
Talk a little bit about that. I want to hear about the other side, the business side as well. But I think the female angle is super important. Actually, one of the things that we talk about a lot, because there's a lot of women on our team, like 70% women in our organization too, and our clients are all private equity firms, and we find that we mostly are interacting with firms that look and feel like the same, are made up of very similar demographics, and even there's just less diversity overall in the private equity industry. So talk about why you've taken that approach, or how you've gone about bringing in a different approach to the private equity world, and how you've leveraged that as an advantage.
Absolutely. When Avante was founded, it was just a woman founding the firm. Actually, we didn't think about diversity in terms of our core mission and what we were doing. Jerry Harmon has been an investor over 40 years, invested billions of dollars, worked at big brand name firms, Prudential, American Capital. And it really was the financial crisis that spurred her and others to encourage her, hey, you have an amazing track record. Why don't you go out and start your own fund? So Jerry's first hire was Evelise, who's now our managing partner. Paul Hayama, who's now effectively our CIO, had worked with her prior. So really it was smart, like-minded investors coming together to invest in the lower middle market. As they started to work on the strategy, realized that having the women and minority angle was not only something that was just important to us in terms of having different voices around the table, but realized it was a real go-to-market strategy, that diversity is a critical business asset for us. And as we approach the market, particularly in private credit, as you're sourcing deals, it's all about the network, right? Where are you sourcing the deals from? How do you win those deals? How do you best support your companies and add value, post-close and really drive those returns? And realize that our approach to the market and our diversity as a team has allowed us to access unique channels that other private equity and private credit firms haven't been able to.
What would be some examples of that? What are some channels or areas or things that you have been able to leverage with that as a strength that are maybe not as accessible to other firms or debt providers?
Yeah. So actually 2/3 of our closed platforms are sourced by a woman at a private equity firm, either sourced or they're an advocate for us at the private equity firms. And I'm sure you've seen some of the data, but the number of women in mid and senior ranks is still very low. I think one of the last stats I saw was 10% of senior investment professionals. And the problem about that is that people often invest in people like them. So if you look at the demographics of the US economy, 50% of small businesses are founded by women. However, it's like 2% that receive institutional capital. And a lot of that has to do with the demographics of the people investing, right? You'd much rather invest with my next door neighbor who has the same hobbies as me and it kind of has the same networks versus maybe that's in a different community, right? Or has different background. So having different perspectives in different networks and senior investment rules allows more capital to be funded to different communities in the US. So similarly, having a team run by women, we've realized, one, we think has added different viewpoints to our investment process. We've, knock on wood, never lost money on a loan across 60 plus portfolio companies. So we have top tier investment returns first and foremost. But in terms of the sourcing and the approach to the market, we have this women's network now, over 1,000 women in private equity, where we host over 120 events a year supporting these women, and really have created a community for support and value add, both for the private equity firms themselves as well as their portfolio companies. And just one example, I think it started probably 12 years ago. Evelise, our managing partner, had someone come to her and say, I'm tired of whiskey and golf events. Can someone please invite me to the spa? And Emily said, oh, I can invite you to the spa. And, fast forward 10 years, we've now closed deals with all 6 of those women on that original spa trip, because in the lower middle market, in the types of companies we're investing in, there's a lot of trust. You want to have partners that you're investing with that understand your business and your objectives, that are willing to be flexible and can help you drive your goals. So you'd much rather work with someone who has spent that time to develop both that trusted business and personal relationship versus someone that may not have spent that time.
Those are some phenomenal points. Actually, I hadn't thought about this angle that, we work with some really large private equity firms, and there's like one woman for every 10 men in the firm. So I didn't think about this angle that the women in those firms are, they want to evangelize supporting female entrepreneurs or female-owned businesses, and that can turn into like a driver of alpha for the fund, and then potentially bring you in. I was talking to a private equity firm yesterday, and they were like, hey, maybe you guys can help us with our own firm branding so that we can land more deals. And I was just giving that person, that managing partner, some advice. And I was like, one thing that I think that's an issue inside most private equity firms is that they look and feel like the same, and they have the same talk track, and they all kind of stand for the same thing. So it's really hard for a founder that's deciding, should I pick private equity firm A versus private equity firm B? Why would I choose this one over the other one? There aren't enough differentiators. So my advice to him was to really like put a flag in the sand or whatever, just to say, this is what we are for. This is our core expertise. These are the people that we help. And then that will lead to losing other deals, but then you kind of win these other ones. And I think your point about the female angle kind of lends to that, because you are basically building a very distinct brand for yourself in the marketplace, and actually making a difference and helping the women inside these firms by having a women's network. And it creates like a whole new type or stream of events that you can hold only, that other folks can't hold or don't have the credibility to hold. And so you can have a much more powerful brand as a capital provider.
That's right. And, we're in a fundraising year, and we've had some investors, typically men, ask us, well, how easy is it to recreate this network? And we typically respond and say, how many other private credit firms do you know out there, first of all, that are led by women, and second of all, that have spent 16 years building this network and building these relationships? We would be so happy if all of a sudden this was not a competitive differentiation, and that there was really support for women in the workplace. But unfortunately, every year there are pretty high churn rates of women at the mid and senior levels. And so there continues to be that need really to help support women to stay in the industry.
I think there's probably, there should be more of these types of things emerging, but that doesn't mean that you can't have a distinct position in the marketplace and be a very valuable player.
Well, and one of the reasons why I was really excited about your podcast in the first place is that we think about the women who we support as part of a broader value add of how we relate to our partners in general. We don't do deals only with women. Now, we certainly do more than the average of the industry, but it's really that value added mindset, right? Of how can I be the best partner to the companies, to the private equity firms, and exactly what you just said as your advice to that other private equity firm is, what is unique about me in the market? I hate to say it, but private equity, private credit, arguably commoditized. Although if you look at the stats, there's still so much more private equity dry powder that has been raised versus credit. So we see the argument for credit in terms of there's still that imbalance. Most deals are funded 50-50 debt equity. So if there's way more equity, there's still more money to be raised in credit. But even within that, well, there are 10 other private credit firms down the street that could be lending to these companies. So why do you want to partner with me in particular? And not only today, but what value am I going to help you drive to get to that next exit, right? That next bite at the apple. Because a lot of times we're funding companies where it's a transition from the founder and the management team isn't getting a huge payout in the transaction. It's really that next transaction where the management team is going to get their payout and some economics. So they're very focused on, hey, you, Amanda, I don't want you just giving me money. I want you giving me strategic advice. I want that approach to the market of, how do you build towards that next exit and create that generational wealth for me and my broader company.
Yeah. I want to ask you something that I think is more of a sensitive topic, but I think you would probably have a really good take on this. I think 5 years ago or 5-6 years ago in the political environment, I think of things like as a pendulum. So it really swung the direction of DEI and ESG and trying to do things to make progress on certain social areas. And then I think over the last couple of years, there's been kind of like this correction, or I don't want to say correction, but the pendulum has kind of swung the other way where people are less focused on that and they're more focused on actual numbers and they might skip past some of the things that they were previously investing into. And a lot of companies have cut DEI organizations and things like that.
Yep.
So how do you see that? Because something you said earlier is 50% of founders are female founders, but I definitely agree. A small fraction of them get funding compared to male founded organizations. But then at the same time, there's the merit-based side of are those companies being founded by females the same quality as an investment asset versus the male founded ones? There's a bunch of other data that I think we could kind of look at.
Yep.
So that's why I say it's a sensitive question. How do you balance that to make sure you're still investing in the best assets and not just driven by the social piece of your thesis or your mission as a firm?
It's a great question. I can't speak for other firms out there in the market, but Avante is a returns first focused firm. So we are looking to have the strongest risk adjusted returns that we can. We often say that people like us don't get a second chance. So if anything, we need to be better than the other firms out there. We were just named last year, Avante, as the number 3 globally ranked private credit family of funds by PitchBook. So I think we were right ahead of Apollo on that list. So we absolutely are returns focused and do not make any exclusionary criteria or investment judgments based on any diversity criteria. What Jerry and Evelise and Paul have found over the years, though, going back to my original point, is that we've seen that diversity is actually a driver of a return. So in private credit, you want to have the widest funnel possible. You want to source as many deals as you can such that you can be highly selective, so that you can be highly selective, have the largest funnel, and then not only source those deals, but be able to win the best deals, right? Anyone can source a deal, but can you get access to the best deals at terms that are not the highest leverage and the lowest price? We are able to leverage the communities that we built, the relationships that we built, such that we're often not the best price or the best leverage, but we bring in our value-added approach and the perspective that we're bringing to the table to persuade the firms and the companies that we're the right partner ultimately.
Right. Yeah. I think that is the main distinction point. And so when you think about generating returns first and foremost, how do you balance that with the mission? Because, and especially when I think about, you're kind of selling through channel partners for using traditional go-to-market terms. And your channel partners are private equity firms that are mostly male, right? So, so you kind of probably meet still a lot of companies that are male-led and kind of goes counter to the mission. So do you try to balance that? Or is it just hey, spread as wide of a net, encourage the female investors in this market, build a network of those folks? Eventually, you're going to get a different mix of companies that come your way versus, let's say, a traditional lender, and then make decisions against that based on the quality of the asset.
That's right. And there was actually Cambridge Associates did a study last year that showed really the latter, what you said, that diverse firms tend to source a different pool of deals. Like they actually looked at with BCG underlying portfolio company data and found that there was some overlap, but that diverse owned firms had access to a different set of deals and portfolio opportunities. So that by investing in diverse firms, you are adding diversification to your portfolio as a LP or institutional investor. One of the best examples, I think, to your point, is we're more of a carrot than a stick, right? We're not out there, again, we are a returns first manager. We're not out there looking to shame people in any way about the underlying diversity of their teams or companies. We take a great company and a great team, and we help to take it to the next level, whatever they look like. So one example is our women's operating network. So distinct from our women in private equity network, we have over 300 C-suite level women who we've got to know over the past couple of years. Jerry, our founder, is chair of a public company, NN Inc. So she's been really involved in executive women on boards and other women in board organizations. And a lot of these women are interested in serving on private equity backed boards, but don't have an entree into the sector because it's hard, right? It's usually, what do you do? Email a VP at a random private equity firm and say, here's my resume. I'm really interested in participating in your board. You usually need to have connections to get to know those firms. So we've now created a database of these 300 level women. We have the relationships with the private equity firms. So every time we invest in a company, but also even if we don't invest in the company, we provide this database as a resource to our private equity partners to say, hey, if you're looking for a woman with health, or it doesn't even have to be a woman, you're looking for an executive, right? A lot of private equity firms now, their differentiation that they bring is executive expertise, where they bring an operator and say, hey, we're looking at a consumer packaged goods company. I'm working with the ex-CEO of, Kraft Heinz or something. And that is how they persuade a company that they will take them to the next level. So we are providing those executives to help drive that value to our private equity sponsors. And then also when we invest in the company, can make recommendations for board roles.
How are you sourcing or bringing these groups, the Women's Operating Network and the other women PE kind of network, together? Like how
Yep.
are you, what is the effort behind that? What is the recurring work going into that from your firm?
Yeah, it's a great question. I mean, a lot of it now is organic, where we've built a brand, we've gotten the word out. And so we're always getting inbound referrals of women that are either looking for community or women C-suite executives that want to get board roles, because we have made a number of matches now between private equity firms and the board roles. We do have an internal person that is also focused. She's our community manager on helping to support these networks as well. And we also use tools like PitchBook and different databases, right, to keep tabs on who is entering the industry. But it is typically referrals to the network.
Okay, got it. And then how often are you bringing these groups together, or what kind of ways in which are you helping the folks inside connect? And I ask because I think this is something a lot of PE firms should be doing, is they're getting their core audience together. And some people do portfolio summits and things like that, but I think this is a little bit different. This is like building a community of a specific subset of the market. So what is the kind of work that's going into that?
Absolutely. And we call it our impact team, which is really the bridge between our deal making and our missional community elements. And it's always changing, right? COVID was such an interesting time where all of a sudden we all went virtual. So one of the things we did during COVID was we started having virtual happy hours, where every month it's a very informal Zoom, 30 minutes with women in different cities. I have one in Chicago, Boston, New York, and Philly, open for anyone who would like to join if you're listening to the podcast. And there's no agenda. It's not a, deal max, like you're sourcing deals from each other. It is really purely a girlfriends meet up, peer building, to have someone. And there's a lot of data that shows this, actually, that women are more likely to stay in the industry if they have a support network, whether it's a senior woman ahead of them that they can see has succeeded, or other people to share tips with. And again, these are generalizations, but I have found that men often see the bigger picture of what it takes to succeed in the private markets, that they're not only doing the deals, but they are grabbing drinks after work with, friends across the industry. They're going to the networking events versus I find a lot of women are really trying to prove themselves and as a result are more heads down working, don't go to the after work drinks, or on the flip side maybe are newer working moms and are rushing home to relieve the nannies at 5 p.m. such that they're missing that after work networking piece that's so critical in building both deal flow and your personal brand. And so the virtual happy hours was meant to address that, of building a peer group in a setting that was easy for people to meet up, right? It didn't have to be that after work drinks. It could just be a quick Zoom call that you can pretend is a deal call or banker call or normal calls that you're taking during the day, but really it's just a catch up where we all exchange notes on, what are we focused on, and really an ask for that group, right? It could be, I'm looking for a QV provider. It could be, I'm looking for comps on carry. It could be, what multiples are you seeing in the tech sector right now, but recreating that networking. Now, fast forward, people don't like Zoom as much, but we have kept the monthly happy hours, but we've now supplemented it more with in-person, right? So we usually do quarterly meetups. We do events around a lot of the large women's conferences, but I just actually started a WhatsApp group for working moms. That was a request from one of the women about finding what are kind of day-to-day ways to engage people. And it's not about me. It's not about, oh, Avante, I love you, and I'm going to send a deal. It's about facilitating that community such that people can connect. And of course, the hope is eventually, over the years that we'll create enough goodwill such that it will build deal flow for us, which it has.
Yeah, I think there's some great advice in there, because I think when we think about community, especially in the private equity world, it's often around like live events and big conferences. And a lot of these conferences are also expensive. Not everybody goes to them. Like I've gone to these like PEI events and Deal Max and all these kinds of things. And there's like maybe a women's breakfast on the side
maybe
at the event. And maybe, right. And then it's kind of, and it's over. You see each other, you talk about some stuff, but in an hour or like hour and a half, you're not going to cover that much. I think the essence of community is ongoing communication. You need a platform like that. And I think that's a strategy that I don't see people deploy, is maybe a Slack community or a WhatsApp group or a Circle private community or whatever it is, where people can go and ask questions, and beyond just like a session where everybody's coming together, you can ask something and asynchronously people can support each other. I think there's a lot of value in that.
Yeah, the WhatsApp group has been working great. We have tried LinkedIn and Slack. Those have been harder platforms, candidly. And, it changes, right? And one of the things I love about Evelise, our founder, is that she's always looking around corners. She is a visionary. She is the one that really saw the potential of what she and Jerry just did naturally, right? Mentoring younger women in the industry, becoming a business strategy. And she every year will sit down and say, what is the new thing that we're doing this year? Every year we try to do one new thing. So for example, last year we did our first symposium for the Women's Operating Network, where we brought 50 of the women to Chicago, 25 private equity firms. The first part of the day was sponsored by KPMG, where it was more like lunch and learn for the operators about the board role, about what they can do to prepare. And then the second half of the day was speed dating with the private equity firms to more tangibly look for board roles. And that was new for us. It was a lot of work, but it was a lot of fun. And again, figuring out what are the new settings that help facilitate connection. We're not doing the symposium this year, but we're, thinking about what is that next thing. For example, we do, separate from the women's aspect, we do an investment banker speed dating event in our offices in LA, because LA is so hard to set up meetings. Like you could, spend all day driving around traffic just getting to meetings. So we bring in outside private equity firms. We bring the investment bankers to our offices. So we've done that for 10 years, but we're thinking about launching now a New York investment banker speeding event because we now have an office there. So just every year we think, we did our first client survey this year. And one of the questions was, what are your pain points for this year? I always love to ask people, what are your goals, personal and professional? And then we craft our strategy around how can we address the needs of our private equity partners in our companies. And the number one need was deal flow, which is unsurprising given the M&A, still depressed levels. And then the number two ask was talent. operators, internal talent, although I know hiring has slowed in PE, but figuring out who are the people that we can use to differentiate our strategy and drive results at our portfolio companies.
Yeah, talent is a huge problem even now. There's a lot of roles inside companies, inside the private equity firms that people hire and then they fire and they can't seem to find the right person. So I totally see that. I want to just say a side thing on the WhatsApp stuff is I think given your audience and how you're differentiating yourself is I think women in general, it's harder to sync in person because of the roles that are played in households and families and things like that. So I think even more so it matters, especially if they're mothers and have kids and stuff like that. So I can totally see the validity of that.
That's right. It's interesting when we are doing in-person events, Evelise always has a philosophy of being really generous with what we do and being special. She said, if you are, when we first hosted this spa wine trip, she said, it better be something darn good to pull women away from their families on the weekend, away from their jobs. There has to be a real justification, right, for people to show up. So either it's something amazing, like the best spa trip ever that you wanted to go, or it's something value add, right? Sometimes we invite LPs, right, when fundraising is difficult, or sometimes we invite bankers if you're looking for deal flow. So it's really trying to get to the heart of the matter of what is, and even now, a lot of private equity firms specialize. So I've seen more and more people looking for industry-focused stuff. They said, look, I'm not even going to go to the general women's conferences. I'm only going to go to a luncheon for, tech, education, bankers in the lower middle market, right? Something that is going to directly address the need of what I need to be driving in my day-to-day job. Because every minute in my life, I feel this, even though we're technically generalists, every minute is a minute that I'm either paying for childcare and I better be hyper focused at work and driving results, or the opposite, right? Spending time with my family, but thinking about all the big goals that we have at Avante. So I better be utilizing my time wisely. And I think that balance makes me more focused and impactful with the work that I do.
Totally. Yeah. All of that makes sense. You mentioned LPs there, and that was the one question I wanted to ask is as you're fundraising for your own firm and you're, raising capital for your next fund and things like that, how do you get LPs on board with some of this work? Because it costs money. It is on top of what a traditional capital provider might be doing.
Yep.
And so how do you sell that idea? And then also on the LP side, is there also like a partnership to find LPs that really believe in this mission and as part of their mission as well to kind of support organizations like yours?
Yeah, it's a great question. On the LP side, because we are a traditional private credit returns focused fund, our LPs really vary. Some care about our mission, some do not, and we're okay with that. Obviously the LPs that are excited about our mission are the ones that we're more aligned with. So we actually, with our next fund, are planning to start an impact LPAC. Again, we're not an impact investor, but we do have some investors that are interested in supporting and providing insight into some of the efforts that we do, supporting women in the industry, for example. So we're really excited about that. On the fundraising in general, we are doing our opportunistic credit fund. We're doing a direct lending fund as well. So it's really more about the risk profile that investors are looking, right? Are you looking for more of that low teens net senior risk, or are you looking for that mid to high net teens return of something that's more of the junior capital positions? In terms of the cost, we have an internship program called the Small Business Investing Scholars. We actually receive fees from our participant firms for that. So we actually, in terms of our events, we try to get as much sponsorship as possible. So KPMG, for example, sponsored that Women's Summit. So from a cost perspective, we try to make it as much of a net neutral as possible to the firm. And I think it's pretty typical now. If you look at a lot of bigger private credit equity firms, you said a lot of people host now, symposiums for their C-suite and their operating executives. So I think what we host is pretty typical to other funds. And we are cognizant of that, right? Anything that we're doing needs to be driving business value first and foremost. We're not a nonprofit and we can't be investing in initiatives that purely are mission aligned and not supporting our business.
Yeah, that's right. And then I guess the secondary question on LPs is, do you find that your approach allows you to raise money more easily, or at least gives you an advantage when you're going to LPs? Because I think that's something that firms are always trying to do. They're trying to raise the next fund, and
Yep.
some firms have a harder time than others. So I'm curious if the strategy actually helps you.
100%. LPs are looking for differentiation. First and foremost, they're looking for returns. So we lead with our returns, no cash loan losses, 4x average gross cash on cash on our equity, realized equity co-investments, mid to high teens net returns on our funds. So first, performance. Second, the attractiveness of the lower middle market. And then third is that differentiation, right? How you approach the market. Why are you different than others? And, most people have a sister or mom and understand the concept of, while most people might be picking in the big apple orchard over here, there's a smaller pear orchard over here, and we're the only one focused on the pear orchard. That doesn't mean we don't also pick from the apple orchard, but understand that concept of an underserved market and how we're able to approach that. And then really the last pillar is our amazing team, right? Their backgrounds, the diversity of backgrounds, allows us to have strong perspectives around the table. We have a unanimous IC. There's very much consensus on our investment team, and a lot of challenging each other, which I think is what drives our strong returns.
Yeah, that's awesome. I can totally see that resonating. And we're coming up on time here, but before we close off, Amanda, where can people go to learn more about you, about Avante, and then also some of these networks and places to actually go ahead and meet some of these other amazing women that are part of the groups that you brought together?
Absolutely. So our website, avantecap.com, has more information on our network. Certainly feel free to reach out to me directly, Amanda at avantecap.com. We can connect you with Gabriella, our community manager. We are advocates for anyone in this industry that wants to do well, that wants to, create a more collaborative environment, and always open to good partners. Ultimately, we have a philosophy that life is too short to work with jerks, and so like to pick and find the good partners, the good people in this industry to do deals with, whether companies or private equity firms.
That's awesome. We'll be sure to include that in the show notes. And with that said, Amanda, thank you for coming on and sharing your wisdom. I think a lot of private equity firms that are listening will take away from the lessons on diversity and also the unique positioning that you've created for yourself in the marketplace. So I appreciate you coming on and sharing all that.
Awesome. Thank you for having us, Shiv. It's been great.
Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you haven't done so already, please subscribe to the podcast on iTunes or Spotify or YouTube or wherever you go to listen to your podcasts. Number two, if you are in the market for due diligence services, strategy consulting, or fractional CMO services, please get in touch with us at www.howtosas.com. And third, please buy a copy of my new book, Exit Ready Marketing. It covers a ton of concepts that we take our customers through: private equity investors, B2B companies, CEOs, operating partners, and marketers. And there's a ton of great value in there that expands on my previous book, Post-Acquisition Marketing, as well. So with that said, I hope you enjoyed today's content, and we'll see you on the next episode.